Right, let's start off with South African news. Jill Marcus, new Reserve Bank Governor, keeping rates unchanged at 7%. Interesting comments, though, regarding growth, regarding the inflation outlook, and it seems that pressure will be coming through from those levels, and also saying that she will not be swayed by unions to cut interest rates further.
I mean, I think the first important comment is that Reserve banks should actually be completely separate from a political agenda. If you look at the best run economies in the world, those are generally have reserve banks or central banks that are completely separate and don't sit very close to a political agenda. That doesn't mean that they don't understand what the country's priorities are. It merely just means that they're trying to run the country's economy in the most efficient way that they possibly can. And that is in essence what she's saying. She's saying that I don't have a political agenda. I'm trying to run the economy to the best degree that I can. And that is evident by her decisions yesterday, to keep repo rates unchanged.
Cobie, also just taking a look at the fact that the ANC wants to broaden the Reserve Bank's mandate, perhaps to include growth rather than just price stabilization and maybe even unemployment. According to the IMF, in 2010 we'll be growing at 4.5% year on year, and of course that's very far from the 6% forecast per annum, of course, before all of the troubles started. Do you think that growth needs to be included in the Reserve Bank's mandate?
Look, I think, it's if you include growth as a component of the Reserve Bank, of what the Reserve Bank needs to do, one has to understand that growth is a net effect of doing all the other things right. And because we're predominantly an export-based economy as far as resources are concerned, an import economy as far as goods and services are concerned that we consume in order to export resources. If you take all that into consideration, we really stand at the at the cusp of what happens internationally. So it's not really it's not as much about us, it's more about what happens internationally. So it's great that we have a growth objective, but a growth objective is part and parcel of what happens internationally.
Right, taking a look at the global outlook for growth, I mentioned Meredith Whitney. She's a banking analyst, and she said the US economy will likely slip back into recession in 2010. On the other end, we've got President Barack Obama relatively concerned about the weak yuan and has asked China to strengthen its yuan. Also, on the interesting front, we're seeing China, of course, continuing to play a bigger and bigger role regarding consumption rather than just production. How do you see all of this playing out, Cobie?
Look, I think for the world economy, I think Chinese consumption is great at this stage. It keeps the world economy going. There's a certain amount, there's a demand factor that comes from them. You're not going to see immediately overnight their economy becoming larger than what the US economy is. You're not going to see that. That may be the case, say, for instance, 5 or 10 years down the line, but certainly not going to be the case today. It also gives the US the ability to recover. And not only the US, but the West in general gives them the time to recover. Meredith Whitney's comments around the US slipping back into recession, that very well can happen. You can have some very weak growth numbers coming out of the US. I think the IMF is forecasting the US to only grow by just over 1%. Next year, which is 2010. So you sit with a lot of this happening, and you're seeing the West realigning themselves in a balance of power worldwide, and China playing a more and more prominent role. And one has to take that into consideration, obviously, when one does investments.
Of course, the US, $12 trillion deficit at this stage. China, complete opposite, sitting with a surplus. I mean, when you're talking about rebalancing of power, I can't not think about the deficit in the US.
Sure. And you've got to repay it, and you have to, and that becomes a drag on your economy. It's a bit like you're carrying an anvil with you wherever you go. Whereas China is not doing that at all. They're sitting with cash, and they're spending cash back into a very weak economy, and they're buying assets at very weak prices at this stage, and they're trying to cultivate their own consumer market. So China looks poised for growth, and they continue to look poised for growth, where they continue to balance capitalism but with central planning agendas to a certain degree, and they continue to have these reforms. The IMF in particular are looking at monetary reforms, and have urged China with more monetary reforms next year, of which the pegging of the currency is a major issue. And a free float currency obviously will work potentially better in the future for them.
Emerging markets, though, forecast to grow 5% going forward from here. And also when you look at developed economies, that's obviously very muted in comparison to what emerging markets are going to be doing.
Emerging markets are export focused. So, look at South Africa as a microcosm of emerging markets. We export platinum and copper and all the rest of the base metals and all the other metals that go part and parcel with that. we don't ask who the consumer is, we merely export wherever the demand is. So if the demand comes from the east or the demand comes from the west, we export. And that is really right across the emerging market space. And that's why you see a recovery as far as growth is concerned. Remember, as you export, you continue to drive earnings. And as you drive earnings, you continue to drive your own economies. And therefore, you see the GDP growth. Not a factor that you're really going to see in the West potentially next year.
Of course, and if we're going to be focusing on exports, we don't really want a very strong rand. And it's quite interesting, the most countries are now trying to talk down their currency because emerging markets have experienced currencies which are strengthening against a basket of, say, the euro, of course, the yen and the dollar.
But I mean, remember that a currency is a relative. So it's never an absolute. So you can't look at it on an absolute basis. You always have to look at it as a relative. And yes, relative to the West, yes, our currencies look immensely strong. But that is because structurally they're trying to keep the dollar weak. The reason for that is because they're trying to create jobs. They're trying to create an economy which can start turning again. And then they can start trying to get rid of a deficit, which is, as you rightly pointed out, is fairly large at this stage.
Which is quite interesting as well, that we're seeing a lot of investors out there moving away from paper, in other words, dollar, yen, euro, and even other emerging market currencies, and opting for gold, because we're just seeing gold reaching all-time highs every single day.
Yeah, I mean, gold is a fear-based metal. You only put your money into gold if you believe there's going to be some form of meltdown internationally. So if you believe either inflation is going to spike, so you're going to have masses and masses amount of inflation, you're going to buy gold, or alternatively, if you believe there's going to be a complete meltdown and currencies are just going to devalue and devalue and devalue, you go back to the base, which is gold. And that is in essence what you're seeing at the moment. And you're seeing quite a bit of price pressure as far as gold is concerned, on the upside. You're seeing a bubble forming, in my opinion, as far as gold is concerned, and people continue to feed that on the back end of that. Well, is the world going to end? Is there going to be complete anarchy? Probably not.